I hope that you are all doing well today. It is Apex here with another trade review video. So today I will be covering the 5 tickers you see on the right hand side of your screen: apps, CALX, RGEN, TECK, and Csiq. So let's get right into it here. Apps is the first ticker that I traded, or that we'll be looking at today. So I noted a fundamental reason to buy was it's another highly touted tech company that specializes in media and mobile communications technology. So I mean, that's a very applicable, kind of vague definition of what they do, but very applicable to the current times as our technology and our media communications continue to develop. Obviously, companies like this are going to play a tremendous role in that continuous perpetuation forward. So that was kind of the fundamental reason. Now again, I'm not really doing a whole bunch of fundamental research. I typically just read a headline, a couple news articles, gauge where this individual company stands in the entire sector, as well as real world application. And this is a stock that clearly has one. Now, when I can look at the fundamental research and not really do too much of it, but I can understand based off the volume that the stock is actually very popular amongst institutions and big players. Now, what I want to see, as I always say, is I want to see high bull volume accumulation. Now, it's a little bit like a cheat code, right? So we don't have to do a whole bunch of fundamental research as technical traders, because we can look at the volume profile or the volume pattern and clearly see that there's a high demand for the stock. So when you see this massive price accumulation that's leading to daily uptrends and continuation in price higher, that's when you know, okay, there's a lot of institutional, a lot of big players who do the fundamental research, who like what they see, and who are investing. And so those are the types of stocks that I want to be a part of. So I wait for a technical consolidation, just like you see here. So I said that it looks like an ascending triangle, possible wedge. Now, ascending triangle, as we'll see with CSIQ, typically has this flat top where price cannot get above. It's somewhat like that with apps here, but then we see a higher low leading up into the apex where we see a strong breakout higher. So a little bit of a wedge play. Some people might have interpreted this as bearish, just because wedges or ascending wedges typically tend to break that way. Excuse me. But based off the volume accumulation and the volume pattern, that tells me that no, this is definitely bullish. Now we just need to wait for a breakout. Something I noted here was a very bullish reaction to earnings. We see this huge influx in volume that eclipsed basically the entire previous month of trading. But although it's red, we do see this big lower wick. And that lower wick tells me that there's a whole lot of buyers interested. Then we see this increase in price value, higher low, and the daily uptrend continues, all from that pivot point. So that's telling. That just goes to show you that there is a tremendous amount of demand. So I recognize this pattern, and then I recognize the last pivot in the pattern. So that is my cue. I want to find that last pivot in the pattern closest to the apex, and I want to see an hourly breakout and close above that level. On apps, that was 45.92. So let's zoom in on the hourly chart and see what I saw. So as you can see, on December 14th, we had a gap up open and a big upper wick, but look at that volume increase. So this pattern, or this trigger entry, has been something that I've been developing over the last couple of weeks, and I find it is spookingly accurate. Spookingly accurate, because I have poured over thousands, maybe not thousands, hundreds of breakouts, previous breakouts that I've traded, that I've watched, that I've missed, rewinding time, looking back at previous years and how price action developed. And something I can see is the last pivot in the pattern. As soon as it breaks, we always see high volume interaction with that level. That goes to show me that a lot of people are shorting, a lot of people are longing, closing their positions, entering their positions. There's a huge flurry of activity as price interacts with the last pivot in the pattern. And that's no different with apps here. So we see a close below, no trigger. We see a close below, no trigger. We see a close below, trigger. Entering at the close of this candle and hoping for price action to go higher, which it inevitably did. So after seeing that trigger entry, now it was about finding where to take profit. Now, I couldn't really find a good fib range. Didn't really like what I saw from a Fibonacci perspective. You know, I typically use those extensions. So I was playing off whole numbers. I saw $60 as a good profit, or a good area to take profit as soon as price got to $60. I was looking for an exit, saw the RSI was oversold, overbought, and exited. So we got a steep decrease in value, retesting that breakout zone. I didn't add in here. I just happy with the first impulse wave higher. Obviously, in hindsight, would have loved to add here. We see an awesome increase in value, but at the end of the day, I was happy to get this move, targeting that $60 level for a 14 point gain. Next stock on the docket is CALX. So the fundamental reason, it's another cloud software company. The sector has shown time and time again how much institutional interest it has, especially as the tech/data sector continues to develop. That's pretty much the basis of my fundamental research. You guys know I've been exceptionally bullish on cloud companies, and for good reason, as they continuously impress. So as we develop in the data world, data analytics, or data storage more specifically, is so important. These companies are driving that sector forward. Then we look at the volume. So what do we see? Huge levels of bull volume accumulation. Again, adding to the validity of my fundamental outlook. I don't have to do 20 days of research straight into a company, poring over their books and their balance sheets and making sure everything is in order. I can just look at the volume. Okay, people are doing it for me. I mean, this is way easier. I can look at a headline, kind of gauge the sector. Okay, yeah, it's a bullish sector. Didn't need to do the fundamental research. I could have just saw that it had a daily uptrend. I do like to add the fundamental element just for, you know, confirmation purposes. Then I see the volume. People are doing their research and it shows. So they're very interested in this stock and the potential it has. So now I wait for a consolidative period and we get a beautiful daily pennant develop. We see a strong impulse wave, great price action, low volume, and the volume that we get is all bullish. So this was just such a textbook stock. Now I actually made a mistake in my interpretation of this stock. I think I entered back here, trying to get a bit of a pullback play, and ultimately was kind of underwater, break even for a number of weeks, and then eventually we got that breakout. But I will still break down what I would have looked for if I hadn't entered early. So obviously the last pivot in sequence here is 25.63. So zooming in on the hourly chart, we see what I was looking at. So we have a strong impulse wave on the hourly, pullback, gap up open on the morning of December 14th, and huge buyer interest coming through. So this volume node right here on December 14th is substantially bigger than anything we saw before. So that's an entry. I mean, the way I approach this, and again, this is not financial advice, purely for educational purposes only, but I like to put half a position in once the price closes above. I save the other half if we see any pullbacks or consolidation, but enter half a position, and then we just see this tremendous increase. It would have been difficult to get the best entry here because price was extended when the trigger was set, and it never looked back. But that could have been a sign that there's so much bullishness in this stock. Any daily pullback we get is a good place to enter that that last size position. So we enter here, saw a big increase in volume, nice daily pullback. We can use our EMAs potentially. I mean, these are just ideas of how to gauge this type of stock. So we see a holy grail type setup here, strong impulse wave, pullback right to the 20 EMA. For those of you that don't know the holy grail, I encourage you to look up Trader Stewie and his blog. He explains it extensively there. But essentially it's just strong impulse wave that corrects to the 20 EMA, and then we see a bounce follow through. So my play, if I had to enter based off my strategy, if I hadn't entered earlier, would have been to wait for that hourly close, put half a position in, set a limit order lower to add if price pulled back, or if we see that huge influx in value over time where I can't see a good pullback to enter on the hourly chart, I wait for the daily chart, see a steep pullback to the 20 EMA. I could have added there, put an average around 27, 28, and then see a nice increase higher. But since I was positioned earlier, I was only targeting the 30-31 level right around the top here, taking it from this this pivot low down here to the pivot high up here. Nice measured move from a Fibonacci perspective. I had full size much earlier, so I had a really good cost basis. A lot of positives for me, kind of just, I guess, luck of the draw on this trade. But took profit right around 30 for a great gain. Next ticker, RGEN. So this is a biological drug manufacturing company. So as you can see, my fundamental reason here, they worked extensively on COVID-19 related developments, which is obviously a huge part of our current environment. So when you see a company working on, like when a company is getting, FDA approvals or funding, government fundings for development projects, I mean, investors are going to perceive that as an extremely bullish sentiment. And that, again, we don't need to dive into a fundamental reason. We can just see it's in a clear daily uptrend. There's clear bull volume accumulation, this entire price action development. I mean, of course, there's high levels of institutional ownership in this stock. I mean, we can just look at that from a technical perspective. So what do? We wait for it to develop in a pattern, a recognizable pattern, and then we make an entry. So price developed into a very, very nice bullish triangle. We have a strong impulse wave, even a pennant. I don't know. So many technical jargons these days, it's hard to distinguish them from another, but bullish triangle overall, we can pair that with a fundamental reason working in a crisis sector, I guess you could call it, with high bull volume. That's a win to me. So what am I looking for? I'm looking for the hourly break of the last pivot in sequence, which is just above a psychological level, 200.19, which is even better. I love when we see those psychological breakouts. We get a flood of activity. And again, what do we see here? So we have the hourly uptrend going into the breakout. You see a strong breakout on January 7th, increasing bull volume. And then the entry right at the close, half size position, see a little increase, waiting for a pullback to enter the second position. I could have front ran that 200 psychological level. I think what I did here is I was just in a little bit early again. I hadn't really had this strategy developed at the time, so I was getting a little bit earlier of entries, but nonetheless, this was exactly what I would have done if I had this strategy back when I took this trade. So again, like, this is a very, very new strategy for me, and I find the effectiveness very good. I had used other ones that were working fine, but the accuracy of this one, catching the breakout as it's happening, as opposed to having to, sit underwater for a number of days or weeks, is definitely a better approach. So anyway, entering with the close of the candle, then half size position, waiting for the pullback, entering full size, getting a really good average and seeing a strong run up. So zooming back out, looking at the daily chart, deriving targets. So I used it from this pivot down here to the pivot up high, being very conservative, wanting to be in and out quick. And I was targeting that 225 psychological. We made it to 226.97. Made a bit of a double top, steep pullback, bulls bought that dip, almost made a V-shaped recovery. I didn't enter here. I was out by 225, but made a very nice gain on this stock. Next ticker is TECK Resources. So this was back in the fall. Again, I didn't have my strategy completely developed, but nonetheless had a good return on this stock. So the fundamental reason, it's a mineral mining company that saw hedge fund interest increase throughout the fall. So I haven't really been into mining companies unless they're lithium, but I thought at the time I wasn't really as aware of the renewable energy environment. Again, this was a little bit earlier in my swing trading switch career, whatever you want to call it. But yeah, so I was interested in the mining aspect of it. And then again, all I had to do was look at, well, what are the technicals telling me? So we got the COVID dump, but now we're seeing clearly in a bullish uptrend. So bulls are in full control, high levels of bull volume, which tell me that there is institutional ownership. We see this massive spike in volume that eclipsed literally the last 3-4 months of trading and moved into a strong impulse wave, and then we began to consolidate. So that was what I was looking for. Okay, so we have this strong bull volume, there's huge institutional ownership. Even if it is a mining company, who cares? Because people with a lot more expertise on the company think it has value. So then we trade in this extended flag or wedge pattern, and we see one of the best moves I've witnessed all year. This beautiful fake out from a bearish reaction to earnings right into an uptrend. Like this is beautiful if you were able to read and analyze this. So we have all the bullish all the bullish technicals. We see a bearish reaction to earnings, price breaks down, increasing bear volume, people, retail exiting their positions, people starting to short the stock. Then we immediately move into an impulse wave higher, brief higher low, change the daily trend, and see an incredible rally ever since. So the last pivot in sequence was actually as a result of this pivot move higher. So I was looking at that 1388. We could even use this pivot here, which was the last previous pivot level in sequence of 1418. So zooming in on the hourly chart, get a gauge of what I would have wanted to see. So we see that strong hourly close right out of the gate after the gap up open, confirming the hourly trend change and confirming the daily trend change as well. So we get that close. That's my entry. I get a position in here. This is not how I traded the stock, but this is how I would have traded it today. So we see that break above the last pivot in sequence, and that would have been the entry. Half size position, got a great run up, waiting for a pullback to enter full size. Would have been able to enter once we saw these hammer candles start forming, showing that bullish interest right on the breakout level. We could have zoomed out. Looking on the daily chart, we had a strong impulse wave, and then we get this beautiful rounding pattern right into a strong momentum move higher. And yeah, overall just an exceptional move. So based off the Fibonacci extensions, I was taking it from the pivot low, the pivot high of the first impulse wave back in September. We got a target right around $16, $17, all the way up to $18.50, $20 psychological. So I wasn't really targeting. I think I was targeting right around 17, kind of right in the middle of these preliminary targets, but got a great move out of it and made a great game. The last stock looking at today, Csiq. So Canadian solar, you guys know I've been exceptionally bullish on the solar industry overall, renewables overall, I should say, and Csiq is no different. So the fundamental reason, solar sector is seeing unprecedented amounts of institutional interest as the world continues to rotate into renewable energy. So again, I didn't even have to do the fundamental research to understand we are in a daily uptrend. Huge levels of bull volume accumulation. Now, this is where you have to be a little bit more dynamic and interpretive of the price action and what the volume is actually telling you. So we see these two massive bear volume nodes in particular, and so that could spook people. That has spooked me out of a trade back when I was just getting started, where I'd see this huge bear volume. I was like, well, I don't want to touch the trade because maybe it's a overall bearish sentiment. But what do we see right away is once that volume is set, we immediately go into a daily uptrend, which goes to show you that there was much more bull volume in that price than is interpreted just from the color of the candle close. It makes a spinning top right into a bullish trend change. This node right here, big lower wick, right into a daily trend change as well. So we see that even though we're getting these high bear volume nodes, it's leading right into an impulse wave higher. So it just goes to show you, like I said, a lot more bulls here than can be seen just based off the color of the nodes. So based off the technical side of things, we are making one of my favorite patterns, an ascending triangle. So ascending triangle, this is what I was talking about with apps. This is why it wasn't quite an ascending triangle. It's a flat top resistance, which price rejects off once, twice, technically 3 times here before breaking out. And the entire time we are making higher lows in sequence, showing that bullish sentiment overall until we reach the apex and see a strong breakout. So what I was looking for was an hourly close above the 45.70 level, the last pivot in sequence. And what do we see here? So again, remember how I told you, we see that massive bull volume or massive volume increase whenever price interacts with the last pivot in sequence. That's no different here. So we have an hourly impulse into a flag, into a breakout. We see the 930 candle open with a whole ton of volume, very bullish candle as we break out of this hourly pattern. Closes below, then we get the 1030 candle, which closes above, and even more volume shows up. So that would have been your entry, and then it pulls back, maybe add here, full size with an average, and let's say the 45s, then we see an explosive move out. Again, I know it's very easy to just say this in hindsight when you have the price action clearly in front of you, but that's the idea. You get the hourly close above, bull volume confirmation, and then we add half once the candle closes, and another half on the pullback. So based off that, we would have had a very good average, and then we see a steady daily uptrend ensue. So for targets for me here, I did not know what I really wanted to target just because I didn't have great Fibonacci extensions. We could have used, this pivot to this pivot, but it was pretty small price range. So I was just using psychological levels. The $60 was one that I definitely saw. So I just let it play out to about $60. Took it off probably just before, seeing as price wasn't just exploding higher. But yeah, took it off around $60, made a really good gain. And yeah, so again, moral of the story, stack the fundamental indicators with the technical indicators. If you do not want to do technical research, find stocks in a bullish uptrend with big bull volume accumulation, which signifies institutional and big player ownership and interest in the stock, thus leading to the assumption that there is great fundamentals behind it. So I hope you all enjoyed the video. Trade safe out there, and I will talk to you later.